An interesting trend looks to be developing among institutional players as their interest in the flagship cryptocurrency Bitcoin continues to rise. This interest has in no small way been gained every single way, and institutions some way into a few times right now. This is a full single day, 585 6C. And not to learn more about getting them the name that does, and cryptos were made to cryptos, and remembering them that they simply have a good time. Of course, seem to get impossible who are amending the prospectus of funds they manage so they can gain exposure to Bitcoin. These institutions are said to be looking to use 15% to 50% of assets under their management to gain exposure to BTC. One way they will be looking to achieve this is through the Spot Bitcoin ETFs that could potentially launch anytime soon. And Marty Party specifically highlighted the case of Advisors Preferred Trust, which is already looking to gain the SEC's permission to invest up to 15% of its AUM in Bitcoin-related ETFs like Grayscale's Bitcoin Trust and ProShares Bitcoin Strategy ETF. MicroStrategy's executive chairman and co-founder, Michael Saylor, had previously hinted that something like this was going to happen soon enough. Then he suggested that more institutional players were going to direct more of their capital to Bitcoin, and a rule that was implemented by the Financial Accounting Standards Board has also paved the way for more companies like MicroStrategy to include BTC on their balance sheet. The launch of Spot Bitcoin ETFs will also make it easier for these institutional investors to gain direct exposure to the flagship cryptocurrency. For a long time now, those who had a prior interest in the crypto token have had to either invest in Bitcoin future ETFs or other Bitcoin derivatives on some exchanges like the Chicago Mercantile Exchange. But this is changing with the potential approval of a Spot Bitcoin ETF. As highlighted recently by Bloomberg analyst James Seifert, Grayscale looks to set the lead the way, assuming all pending Spot Bitcoin ETFs were approved simultaneously. This is because the asset manager has already established itself with GBTC and would likely have more capital and other issuers upon launch. Now, GBTC is the effect of the over. Bloomberg analyst Eric Balchunas highlighted this fact and hinted that the Securities and Exchange Commission could decide not to let Grayscale launch on day one because of this. If that doesn't happen and all funds launch simultaneously, then Grayscale is likely to have a sort of first mover advantage. And however, other asset managers will be looking to assert their dominance by adopting different strategies. One such strategy will be these issuers undercutting themselves in terms of the fees they will charge to manage their respective funds. Invesco already made it known that they will be waiving fees for the first 6 months and the first $5 billion in assets.